I do wonder if Amazon's like strategy around grocery is a little confusing to consumers, because you have the Whole Foods, you have Amazon Pantry, and then now they're opening the Amazon Fresh stores.
Hey gang, it's Tuesday, August 10th. Cindy and listeners, welcome to the Behind the Numbers Daily, an eMarketer podcast made possible by VTEX. I'm Marcus. Today I'm joined by one of our directors of forecasting. It's Cindy Lou.
Hi, Marcus.
Hello, there she is. Thanks for joining me. Today's fact. Yes, you can feel when someone is looking at you. It's called gaze detection, and it's the sense your brain uses when it feels someone staring at you. A July 2008 research article published on Science Direct found that certain brain cells fire in response to when someone is staring right at you. But when the observer's gaze is averted just a few degrees to the left or the right of you, that causes different cells to fire instead. We've evolved with this ability in order to sense potential threats. Can you tell when someone's staring at you, Cindy?
I think so. Right? I think everyone has that kind of sixth sense.
My gaze detection is awkwardly responsive. So if someone's looking at me, I know they're looking at me within a millisecond of them looking at me. And so I automatically just look at them. And then it's like...
It throws them off.
It's pretty uncomfortable for everyone. Yeah. Anyway, you can sense it. Today's real topic, Amazon retail. Amazon is valued at about $1.8 trillion. That's more than twice its value than before the pandemic, notes Karen Weiss of the New York Times. To get you a sense of how well Amazon's doing, it's valued at twice as much as what it was pre-pandemic. The Seattle-based tech giant took home almost $30 billion, 30 in profit, $30 billion in profit in the last year, writes Sebastian Herrera of the Wall Street Journal. And today we're talking about how they did in Q2, specifically April, May, and June. We'll go through their revenue highlights really quickly and then get Cindy's take. So Amazon poured in $113 billion in Q2. Yes, $113 billion. That's up 27% year on year versus the 40% growth of Q2 2020. And still missed expectations somehow. The BBC notes that Nicholas Hyatt, equity analyst at Hargreaves Lansdown, said, quote, "It's saying something when you can report quarterly sales roughly equal to the annual GDP of Ukraine, which is the 60th highest in the world, and 33% operating profit growth and still disappoint the market. That $113 billion, that gives them their third consecutive quarter of making over $100 billion. And that $113 billion is nearly double what Google made and 4 times as much as Facebook. It's lots of money. Let's go through some of the line items. Online store sales continued to account for nearly half of the money Amazon makes. That was up 15%. That growth being 3 times slower than last Q2 though. That's online store sales. Third-party seller services. That's the next largest share of Amazon's pie, 22%. That was up 38% year on year. 22% is the share. Growth was 38% year on year. AWS next in line with a 13% slice of the pie, up the same amount. 37% faster growth than last Q2. And then you've got subscription services, largely Prime, and other, most of that's advertising. Both of those account for 7% of Amazon's revenue. The difference is subscriptions were up 32%, other, or advertising, nearly doubled, up 87%. We'll cover Amazon's ad business in more detail in another episode. And Cindy, their final line item, physical stores, makes up the remaining few percentage points worth of share for Amazon. Its Q2 growth was up 11%. So start with a letter grade on how you think Amazon performed, and then what jumped out to you?
A letter grade?
Yeah, just an A through F.
An A? I'm giving them an A. I mean... The fact that they're still growing is, growth is still growth, right? And it's unrealistic to expect that they would be able to sustain the growth levels that they had experienced last year. Obviously, Q2 was going to be a very tough quarter for them. They were coming around to lapping the start of the pandemic. And also, keep in mind, it was also a tough quarter because they've been consistently outperforming expectations. So, you're setting the bar high. People are coming to expect something from you. And then, you missed the expectations or you missed the consensus estimates. And so now everyone's disappointed, so.
Yeah. And we should say missed. 115 is what they're expecting. They're at 113.
Right. And
actually
that rate actually comes within, I think it was their midpoint of their guidance that they gave in Q1. So they still hit their guidance.
They did well.
They just missed the Wall Street's expectations.
Yeah.
But, thinking of that 27% growth for, their overall sales, that's, still a really great performance. And, for most companies not named Amazon, that was something you would want to be striving for.
Yeah. How about Prime? How much did Prime Day, because that was in June of this year, so it fell into the Q2 quarter. How much of a boost did that give them?
So I was parsing through their earnings calls, and actually they did give some good tidbits. So, they talked about Prime and how actually they said that it surpassed record levels of Prime Day. So it performed better than the Prime Day in 2020, which was in the fall, right? So they said that, but then also they did say that without Prime, the impact of their, and I'm not sure if they meant the impact of their overall net sales, like overall revenues of the company, or just the online stores, but I'm assuming they meant overall sales. But the impact would have been, if Prime Day did not have happened, would have been in the mid-teens, they said.
Of growth?
Yes, of growth.
Oh, wow. Okay, so they were up 27%, but without Prime Day, mid-teens.
Yes.
Interesting. Okay. There was an estimate by JP Morgan. They had said that this year's event generated about $8.4 billion in sales. So that was just one estimate. It wasn't anything that the company released.
Right. Yeah. I mean, so considering that Prime Day was in Q2 and it did provide some significant boost for them. I mean, so, they said that growth rate would have dropped to the mid-teens. Thinking about Prime Day, it's also not just an event for driving online sales. I mean, it is, but they also generate other revenue from Prime Day, right? So they add more subscriptions to their platform, right? So you have more users coming on, you have more advertisers who want to advertise on your platform. So there's a whole other revenue stream that they're adding through the Prime Day event.
Mm-hmm. And a whole other revenue stream for a lot of other companies. Insider Intelligence analyst Blake Drosh noted nearly half, 46% of Amazon's Prime Day buyers in the US said they did not participate in any other sales event during this year's Prime Day. As according to a June survey by supply chain platform Blue Yonder. He notes that Walmart was the most successful in piggybacking on Prime Day, noting that in the study, 35% of folks said they participated in the retailer's concurrent deals for days event in some capacity, Target 26%, Best Buy 15%. What do you make of these numbers, Cindy? Is Prime Day just going to become more of a general retail holiday in general and less Amazon focus?
Yeah, I mean, I think we've seen that over the last couple of years. A lot of other retailers and mainly, their main competitors are offering their own sort of sales events and holidays around Prime Day. Mm-hmm. And you'll see that, I mean, even in the last couple of years, as Prime Day has shifted from quarter to quarter, different months, all other retailers have been able to follow suit and, put on their own sales events. Yeah.
They also noted that they now have over 200 million Prime subscribers. I don't know how they can add any more, to be honest. There's only 250 million adults in the US. So it's basically 4 out of 5 adults. We estimate, Insider Intelligence estimates that 5 years ago, 1 in 3 American households had Prime. Today, 2 out of 3 households have Prime. And by 2025, 7 in 10 will. So everybody.
Yeah. I mean, keep in mind that, I think as we reach a ceiling, if you will, in the US, in terms of the number of households you can actually, penetrate, they're looking outside, right? So they are looking into international markets. And I think that's where the growth is coming from. So if we keep seeing, pretty stellar growth in the number of Prime users, that's more likely probably indicative of the growth in international. So I think in this quarter, they added Portugal, for example. So they added Prime membership benefits in Portugal, and then they continue to expand their services outside of the US. So just keeping in mind that, not all countries that they are available in have the same offerings, right? So I think they have 1-day shipping in several markets, but not all. So it's them, continuing to invest in fulfillment in these other countries and then being able to offer, these types of services.
And also being able to squeeze more out of the people that you have, right? Once you reach that saturation point, it's about how much more money can I make from each of these individuals. And consumer intelligence research partner CIRP found Prime members shop at Amazon 27 times a year. So that's once every 2 weeks, pretty much on average. That's almost twice as frequent as customers who are not Prime members. That number's kind of held up for a couple of years now, I think, that they've been doing this research. So Prime members consistently shopping a lot more. In terms of their physical stores, Cindy, physical stores, I said, so it makes up the remaining few percent share for the company. It gives it about 4% of the total that it makes comes from physical stores. The growth this quarter was 11%, and physical store growth had fallen each of the last 4 quarters. Q2 of last year fell 13%. Q3 it was down 10. Q4 it was down 8. Q1 it was down 15%, and then you see an 11% rebound. Even 2019, the whole of 2019, it was basically flat. But what do you make of this 11% growth in physical store sales and Amazon's strategy in that space? It seems to have kind of slowed down, if you will.
I think that's exactly correct. Their physical stores struggled last year. So it's mainly Whole Foods that comprises of physical stores. And, that saw pretty sharp declines last year. I think Whole Foods, one thing that to keep in mind with those figures is that the online portion of Whole Foods, like when you're shopping on the Amazon platform and you're selecting Whole Foods and, you're either selecting delivery or click and collect, those sales are still being attributed to the online part. So that's the one thing to keep in mind is that the physical stores is what it means. It's physical, only physical, right? So
yes, where did you make that purchase?
Yeah, those sales declined last year. And, I think one thing that I'm looking at over what are their figures is the physical store sales, like how much they represent of the overall company does seem to diminish, year on year. So, back in 2017, when they, first acquired Whole Foods, I think the physical store presence share of overall sales of the company was about 7 to 8%. And now it only represents about less than 4% of the overall business.
Right. And some people might think, oh, well, of course, because their online stuff's doing so. No, their total amount of money they made, I've only got 2018 here, Q1, $4.3 billion. And you fast forward 3 years to the quarter that just happened, 4.2. So they're making exactly, and pretty much every quarter, by and large, it's 4-point-something billion dollars has been for the last 2 or 3 years. So the dollars just aren't going higher either.
Yeah, I do wonder if Amazon's strategy around grocery is a little confusing to consumers, because you have the Whole Foods, you have Amazon Fresh, you have Amazon Pantry, and then now they're
Amazon
opening
Go stores.
The store, and then the Amazon Fresh stores. So the offerings, I feel a little confusing. And then now also with Whole Foods, I think they just recently announced that they're adding a delivery fee to Prime members. So I think just 2 days ago. Yeah. So that's one other thing where, you're beginning to think, oh, well, maybe Amazon, they don't have it quite figured out just yet.
Yeah, I think you're spot on. I'd love to see some research which asks people, how many folks know that Amazon owns Whole Foods? Similar to, there was some research I think Blake had brought to the table. How many people know Instagram's owned by Facebook? Because if you don't put 2 and 2 together, then you don't know that you'll get Prime benefits inside of a Whole Foods. And to your point about the other stores, I also feel like it's confusing from a technology standpoint. Like, people go up to an Amazon Go store. How does it work? Can I use a card if I want to? What's the Amazon Fresh thing mean? So yeah, I think they probably do need a bit of a realignment in how they brand these things. It's kind of a bit of an HBO fiasco. Anyway, net income, $8 billion. That was up 50% from a year ago. I thought it was a number worth pointing out as well. Let's move to their expectations for Q3 and Q4, Cindy, especially bearing in mind that Prime Day, as we mentioned, was in June. What do they expect from Q3, 4, and do you agree with those figures?
Yeah, so their Q3 guidance was net sales growth between 10 to 16%. And to me, that would be a very significant slowdown.
That's low.
Across, almost all their business segments, and especially likely across their online stores. And since we are already, they released their earnings last week, so we're already kind of midpoint through Q3. They probably have a good inkling of how the quarter's performing. I would come to expect that those numbers might be, more in line, like realistic. So the only other thing is, I would say as well, obviously they did say that without Prime Day, growth would be in the mid-teens. So that kind of aligns with that as well. But also, I wonder if they're using this time to sort of realign expectations too. You have the new CEO, Andy Jassy, coming in, and, you're consistently reaching, high expectations. And then now could be a good time to reset, and so that in the future you can outperform. Yeah,
that's a good point. Still below Wall Street's expectations. They're shamelessly looking for something closer to 120 billion. Amazon saying no, something in the 106 to 112 range, if you don't mind. You said about 10 to 15%?
Yeah.
Okay, that puts it about 2 to 3 times slower than their Q3 of last year. So 37% Q3 2020. 24% the Q3 before that, 2019. So yeah, uncharacteristically low for a Q3, even pre-pandemic. But still, anytime you're talking about over $100 billion, you're not in trouble really, are you? Yahoo Finance notes that Amazon is also facing tough regulatory headwinds, including an ongoing Federal Trade Commission investigation into its alleged use of third-party seller data to produce and sell its own Amazon Basic branded goods. So something else Amazon's having to watch out for. That's all we've got time for the first half. It's time now for the halftime report, where we summarize the key takeaways from the lead story in about 20 seconds or so. Cindy, your takeaways from the first half are?
They were unsurprising.
Yes.
You're come to expect that Q2 is going to be very tough. I think what is surprising is the guidance for the back half of the year.
Yeah, that's it for the lead story. It's time now for In Other News. But first, a quick word from our sponsor, VTEX. Retail's next competitive threat may come from a business model or channel that didn't even exist a few months ago. This modern dynamic requires companies to adapt quickly, pivoting business seemingly overnight, something traditional commerce platforms just can't support. There's a new enterprise commerce platform on the rise, one that's fast, flexible, and doesn't require 9 months and $1 million to get up and running. Go to VTEX, VTEX.com/eMarketer to learn more. All right, folks, we are back today in other news. How to sell quote-unquote ugly produce, how BNPL users are different from credit card users, and how close is more traffic to getting back to 2019 levels. Story 1. Online grocers capitalize on subscription box trend to sell quote-unquote ugly produce, writes Tara Weiss of Adweek. She notes, as online food delivery and a desire to be more sustainable gain popularity, two companies, Misfits Market and Imperfect Foods, have separately created a market for quote-unquote ugly food with their subscription boxes of discounted organic produce. If food doesn't look nice, it is often deemed unsellable and tossed. And these two companies want to take that food and sell it in a subscription box to folks who don't mind all that much what it looks like as long as it tastes good. Cindy, your thoughts?
I was reading the article and one sentence popped out and it was like, just because the produce is ugly doesn't mean it's not edible. And it's so true.
Very true.
I think any way that we can reduce food waste, is a good thing. And I've seen other things as well pop up recently, like restaurants using apps to sell like unsold meals as well. So there's like an app where consumers can go on and find meals from restaurants at like a discount price too.
Just will continue to push the online grocery space forward. Companies focused on consumer waste education and Discounts, these companies who are working on this initiative to push this misshapen produce. Misfits is taking its message on the road as well with a branded van that went on an 18-city tour recently. Misfits founder and CEO Abhi Ramesh says, quote, "You still want to see, touch, and have interaction with a food brand, so that in real life component is a critical part of the strategy," close quote. And about 54 million households bought groceries online in August 2019, says Brick Meats Click. That's from the Adweek article. That number reached 72 million in June 2020. So from 54 to 72, a year later, it's at 64 million. So up and then down a bit. Story 2. 70% of adults live in a credit card household versus the 17% who live in a buy now, pay later BNPL household. 10% do both. That's according to a recent Morning Consult study looking at how BNPL users are different from credit card users. It found 2 out of 3 BNPL only users who don't use credit cards as well had income of less than $50,000. And US folks who used a BNPL service in June were also more likely to report income volatility and be behind on their finances. Despite this, most BNPL folks reported actively working towards near and long-term financial goals, with a significant share making progress. Users of both credit cards and BNPL services were progressing towards their financial goals the most versus people who did one or the other. Those folks are making careful decisions about purchasing methods with their financial goals in mind, writes Morning Consult's financial analyst Charlotte Principato. Cindy, what do you think?
Yeah, I think what was interesting here was that the overlap between credit card users and then people who use BNPL is quite low, right? So you said 10%. Yeah. So that means it's two very distinct groups. I took a closer look at the data, and I think what I found interesting was, while buy now, pay later users tend to be in lower income households, if you parse through that, around 77% of BNPL users were actually Gen Z and millennials. So I think their incomes are going to be relative a little bit lower in anyways.
Great point.
So I think it also supports the narrative that we have where users of BNPL are more likely to be younger, maybe have less desire to use credit cards and fear of debt and things like that. So it's almost like getting these consumers, on their feet and on the right track to like financial stability or independence.
Yep. Story 3. Malls are within striking distance of 2019 traffic levels, writes Al Urbanski of Chain Store Age. He notes that Placer.ai's latest mall index shows that traffic in enclosed shopping centers during June 2021 was only 8 percentage points off June 2019, 2 years prior. For outdoor malls, traffic was only off by less than 6 points from the 2019 levels in June. That's a bit worse than May, when crowds were nearly the same as 2 years ago. But Placer.ai explains that this is likely because outdoor centers have been benefiting or had benefited from Memorial Day sales in May, when some enclosed malls remained fully or partially closed. Cindy, malls being within striking distance of 2019 traffic levels, what do you think about this?
I mean, I'm not surprised. I think going to the mall is still kind of like a pastime activity. It's almost like, but what do you do at the mall? Are you just there browsing? Are you buying things? But obviously having more foot traffic, having consumers return to the store, these are all, very encouraging signs for the economy, for retailers. And I guess we just hope that, in the back half of the year that whatever happens with the pandemic, we're able to control what happens with the Delta variant.
Mm-hmm. Placer.ai's VP of Marketing, Ethan Chinovsky, says, quote, "If the gap increases between 2019 crowd levels and 2021 levels, it may have more to do with the heights hit in 2019 than the pace of recovery in 2021. But if the gap continues to shrink, it's a strong sign for retail," close quote. That's all we've got time for. Thank you so much to Cindy.
Thank you.
Thanks to Victoria, who edits the show. Thanks to everyone listening. Today, you can check out our Tech Talk webinar with Cvent about event mixology, crafting your event channel for growth. Check the show notes for the link. Nicole Perrin will see you tomorrow for the Behind the Numbers ad platform, an e-marketer podcast made possible by VTEX, where she'll be speaking with the CEO of Awin, Adam Ross. I suppose everyone's today, you'd have to be able to sense it, because if you couldn't, then you wouldn't have made it. You wouldn't have been able to evolve to who you are today, because you would have been killed by a predator. So everyone today is good. Everyone's fine.